Hi guys, hope you guys are good. So today we have a new video. As you yesterday, I posted a video of Euro USD trading the same model. So today I'll be posting the gold analysis using the same concept, same analogy, and the same model as the one that I used yesterday. The only difference now is that yesterday I used the 7 a.m. Um, New York time. So today I'm gonna be using 1 a.m. New York time, which in South African time when it's 1 a.m. in New York, South Africa is it's 7 a.m. So due to daylight savings, the time has changed to 8 a.m. So basically, I still call my model a 7-11 model because I cannot change it to 8. So due to the time difference now, I still use it as the same model. But basically, if you cannot find the same model at 7 a.m. New York time, you have chances to find it at 1 a.m. New York time. So yeah, now that I got that out of the way, we can just get into it. So if you can check my previous video, um, the same analysis was the same as the yesterday's. So I'm just gonna do this analysis on euro. Yesterday was euro USD, so today is gold analysis. So basically, the price took out the buy side here. We have this relative high, as you can see. The price went to this 1 minute breaker block. We have this low high and this lower low. So this confirms this as a breaker block. So the price at 1 a.m., you just put your vertical line here at 1 a.m. and you mark the 1 a.m. candle. After 1 a.m., you just look for the relative highs that take place after 1 a.m. So in this case, they happen like immediately after 1 a.m. Gold created relative highs and relative lows. So the price traded high to this breaker here, to this breaker that I just explained, and it took out the 7 a.m. highs, the 1 a.m. highs, I mean. So after the price did that, this was gonna be your sell opportunity that you use to trade the model. Um, this would be your first sell. Then the price traded lower. Take out this sell side here. Now it becomes market structure shift, and there's a true open here. The price didn't trade back to the true open. If I can just remove this, the price didn't trace back to the true open, but it left the price when it traded lower, it created this displacement and left this breakaway gap where the price didn't trade like deep discount in this breaker here. But here, what do we have? We have a 00 GMT midnight opening candle. So the simple rules of trading in midnight opening is that you buy above, you sell above midnight opening, and you buy below midnight opening. So in this case, the price traded below the midnight opening and went to this breaker here, to this breakaway gap here, and this is where you would have taken a second partial using this fair value gap. Your stop loss be above this breakaway gap. So basically, a breakaway gap is a fair value gap that if the market is really really bearish, the price wouldn't go back to this fair value gap. It doesn't have to go back to it. It will just leave this gap open and then trade lower. So now the price that they traded to this here, you're gonna be targeting the sell side. So this here, we have this minor sell side here. Let me just scroll it back. So we have this low here and this low here. This is the minor sell side liquidity that the price was drawn to. But the major drawn liquidity would be this low here because the price is coming from a bearish market, and this is where it took a major reverse to the buy side. So the price traded higher, and that low became a reference for this trade here. So once you figure out this liquidity here, the minus upside liquidity and this drawn liquidity, what you do is just take your fib. Remember, as I told you in my previous video, what do we measure the range that's responsible for taking out liquidity. So this range here is responsible for taking out the buy side liquidity. So this is the one that we use for targets. So for deviations, the price will trade lower. It has a first standard deviation. You don't take out the partial at this deviation, but below the deviation, if there's a PD array or there's liquidity, that's where you take your first partial. Then the second partial is just taken on a fourth standard deviation, which was on the major drawn liquidity. Below that, the fourth standard deviation, there was also liquidity, the same as this one. So this is where you take out your 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 partials also. Yes, the price will continue to go lower, but this model gives you discipline, gives you something to look for because you cannot just trade in guessing that the price can go lower or can go higher. giving you these deviations help you to find how far the price is willing to go, how far the price is willing to, how to take partials, how to take to trade your stop losses. So this deviation that I use on my Fibonacci, they're the best to measure the deviations on where to take the profit. So if you can just hit the subscribe button, we'll be making the live analysis. I'll be showing off my Fibonacci settings because they are the very important settings that you can use to find your exits, to find your entries. So just hit the subscribe button. So this is the same analysis that I did yesterday on Euro USD. I'm doing it again on the following day using gold analysis. So we can trade this model in each and every asset class, whether you trade Bitcoin, whether you trade stocks, whether you trade Forex, you can still use the same knowledge, there's the same model at the specific time and the specific delivery. So if you are interested in finding more on this model, how to trade this, just hit the subscribe button. You're going to be making live analysis, we're going to be making live trades. We have more in of our videos where we do live executions in our in our channel, right? So you can just scroll around and check how we trade the 7-Eleven model. But this is the pattern recognition part two. So yesterday I did Euro USD, same model. You can just go back and check on that video. I'll just leave the link on it. Then today we're doing Euro, we're doing gold, and it's the same delivery, same model, same everything. So I'm planning to make five of these in consecutive days. So as today I did, yesterday I did Euro, today I did gold. Tomorrow I'm gonna do NQ and I'm gonna do USDT. Then I'll wrap it up with Bitcoin. So please guys follow my channel. I hope these videos you find them insightful. I hope you get this model. um, Thank you guys, enjoy the rest of the weekend. See you in our next video. Thank you. Peace.